About 3 years ago, I discovered the stock market and immediately fell in love. Ever since that time, I've spent the last 3 years studying all about economics, studying charts and trading. It has become my dream to be a professional day trader. I scraped together a little bit of money in order to in order to do this. You can see the balance is right over here. Unfortunately, this is not exactly enough to become a professional day trader. That balance is going to have to get a lot bigger. How much bigger, you say? Go. Might as well go. Considering the fact that minimum wage is $15 an hour, I should probably at least be able to beat that. So $15 an hour, given the average calendar year, is about $31,200 a year. Okay? Now, as a trader, you don't have the same 52 weeks a year that you do with the regular salary job. So if you take $31,200 and divide it by 252 trading days a year, this means I need to generate about $125 a day. Okay? I am chronicling my journey, and I put all the information about it here. This is the Russell Journal. I am Russell, and this is my journal entry for today. Friday, October 28th, 2022. So, how'd I do today? Well, you can see over here, I made about $38 in trading profits today. Was a very, very rough day as far as trading went, which is really ironic given the chart behind me. What you're looking at behind me, this is the index that I trade on. I trade only this index, ticker symbol SPY. This is the proxy or the cash equivalent of the S&P 500, okay? If you look on the chart today, you can see we pretty much just went in a straight line up all day. So from this move all the way down here to this move all the way up here, how come I only made $38? And this brings me to the topic of today, which is setbacks. Now, as you go through and as I've gone through and have been learning how to trade and trying to get better at trading, you'll find out, just like any other thing that you want to be good at or anything you want to do, that you're going to find numbers of setbacks. Okay, some of that comes from straight incompetence, some of it comes from ignorance, and some of it just comes from a lack of proficiency. Then there are a few setbacks that happen to you, and they are more or less maybe an act of God or a broken system or something there. Today, I was subject to that. Coming into this morning, I saw the momentum moving into this chart early in the morning, and I tried to get a long position all through here. And as we got through here, these moves, I tried to get this, and I could not get a fill. No, I couldn't. I've tried several times through all of this to buy a call on this pullback right here, especially right going into the open over here. This first candle over here, first green candle over here, I tried to get long. I couldn't get an order filled. It was just that simple. It was going too fast, and that happens. Now the problem here is once you get up here, once you make the move from down here all the way to this point up here, you're coming into resistance. And there's something that's interesting about options, which is moving from point A, you would love to be able to say, I bought an option here, and I sold all the way back up here somewhere, right? All the way at the top. You would love to be able to do that. Here's the problem. Part of what the value of your option is, you have two sides to the option. You have intrinsic value and extrinsic value. Now, the intrinsic value is value that's baked in. Say you bought your option down here around 380, and you bought the 380 call, and by the end of the day, you're at 389. Your intrinsic value is going to add about $450, give or take a few, to that option. But there's two things that are working against you. The first one, volatility, okay? The more volatile, the more quickly this goes from here to up here, the more valuable that option is, because more guys will be chasing it. The more valuable that premium becomes, the more they're willing to pay, because the faster that option will pay them, okay? The second thing about it is that burns against you is theta. So theta is the time decay. And if you haven't seen my video on theta, I've done a video on theta, so go back and watch that video. And you will see here that you will know that, see this slow grind all the way up all day long? For every penny you're making, you're losing pennies. You're losing pennies as the time ticks off your option. So even so, getting into any of this becomes incredibly complicated, incredibly difficult. And even if you get in, say, right over here somewhere, and you're trying to hold for all the way up here, right? You've got 75% of the day right there that just gets eaten out of your contract, you know. So you have to be fast. When you come into this type of a market, you need to be quick in and out, okay? So how do you deal with setbacks? I get here and I look and I start thinking, well, what am I going to do? I actually started thinking, well, the only thing to do here is what they call scalping, okay? So my very first scalp was an $8 gain over here, and we hit this high spot, and I held short back into here, and that is where I got my first $8. And when it looked like it wasn't going to turn and break down, I cut short. Then as we got into the end of the day, I had 3 or 4 trades all the way through here that were long trades, and I picked up about, there was like 3 of them there, those 3 trades, I picked up about $10 each as it banged around there. And I kind of knew what to do here, because believe it or not, this 389.10, coming into that is actually the, that 389.10 is right where the 18-week moving average is. And one of the things I could figure on was that the first challenge of a major moving average is usually rejected. So I was pretty secure knowing that I could take longs off of this bottom Bollinger Band and cut them out right off of the, right out there around 389.10. You can see we never really broke over it the rest of the day. And I would expect that on Monday you will see a nice pullback, healthy pullback from there for whatever reason or another. They will give you other reasons to in the market for the why that they'll come up with a catalyst. They'll make up something negative, Russia, nuclear war, some other BS. Okay. Now, given what actually happened, right, that caused this nice little pop. Well, we've been talking on this channel about a couple of things. Very first thing we've been talking about is the Federal Reserve. Okay. And the idea that the Fed is going to do some type of pivot or pause. Now, ask anybody and they will just assume people are greedy and they want free money. And which is true, that to any degree, there's an actual truth to that. But what we've been discussing on this channel is there's still not enough of that to justify this, okay? Especially going into an economic condition that's bad, especially going into not just an economic condition that's bad, but going into one that's ambiguous, you know, ambiguous, I'm sorry, struggling with that word. Okay, we don't know how bad it really is going to be. And we can assume that it's going to be fairly bad in the next coming 12 months. Overall, we haven't seen it, right? But that is possible, okay? Now, so all of that being said, that's sort of, if you ask somebody, those are kind of what they're thinking. And if you're not really into finance or you don't really understand how the big boys move, you will realize that the idea of a Fed pause, they have to do this. They have to come in and buy, and they have to balance their accounts based on the possible relative cost of money or the stable cost of money, okay? One of the things we need to remember is that these guys don't care if interest rates go up or go down, right? What they care is that the cost of that money is stable. They can balance an account off a stable cost of money, off a stable interest rate. They can do that. They don't, it's not, oh, we're just going to get free money. And there is a little bit to it, but you've got to take the tinfoil hat off and stop thinking it's just solely greed, right? I'm sorry, but solely greed just, it's not sustainable. Go ask anybody from Enron or from Theranos or any of those other companies that have failed trying to do that. There is a level where the efficiency of markets weeds out those guys who are just who just take, okay? And it doesn't last, right? And if you really want to see it, go look at Melvin Capital or any of the guys who tried to get one up on the Wall Street bet people during the GameStop saga, right? The market weeds out stupid, petty greed. It's okay to be greedy, but when it's petty. On Wall Street, they have a saying, bulls make money, bears make money, and hogs get slaughtered, right? So this can happen, and you can be greedy. You can want easy money. That's fine. That's what the stock market is slightly all about. It's a lot about that, right? But it can't be unabashed, right? It can't be unrestrained. It has to have a reason, okay? And when you listen to these other YouTube channels and you have other guys talk to you about it, you have to realize it's not as much of a fool's errand as they want you to believe it is, okay? Especially given that, like, their dream, the dream of a lot of these YouTube guys is to they're looking to hit the lottery. They cannot wait for capitulation to happen and them to get rich, right? And if you ask me, that is a horrible thing to want. Horrible thing to want. It's a good, look, if you are there and you can make money in a bad situation, you should absolutely do that. But the way they foam at the mouth is disgusting, okay? So you should not want that. That means people will be in the streets, homeless, starving, okay? And if you're a bull and you are wanting the Fed to pivot just so the equity value, the number of dollars this is worth, that's also disgusting because it is gross. That also will lead to the destruction of our currency. It will lead to the destruction of our economic system. You should not want either of those things. You should want a fair and balanced economic system. Now, I didn't mean to go on that little rant. We really did want to talk about setbacks. And the thing is that you're going to have to deal with setbacks as a trader. If you want to know, go back and look at my video. It has a negative 60%. I had lost literally 60% of my account in, like 3 days. So go back and look. It's a setback. I was trying something, I was incompetent, and it set me back, okay? And we have to deal with it, right? You have to deal with it. And from what I can tell, all the books I've read, the guys who make money in trading are always the guys who never quit. They blew up their accounts time and time again. They had bad things happen. They made bad decisions. They made bad trades. But the guys who win are the guys who don't quit, but they're also dedicated to constant improvement. Losing that 60% of my account has now put me on a path where I think I can do that. And guess what? I'll go until it doesn't work, and then I'll try and improve again, okay? So that is my dream. It's my goal. It's what I want, right? And I'm going to make this happen, okay? So with all of that being said, I'd like to thank you guys for watching today. I am Russell. This has been the Russell Journal. This whole show is written, edited, and hosted by me, Russell Liss. We are produced by Social Media Shows. Our executive producer is Maria Pereza. Check out socialmediashows.com. Those guys, it's a really great setup they have. I'm in their studio now actually doing a video, and it's wonderful. The screen is behind me is really, really good. I have somebody to help me with the slides. We've had a few hiccups there because I don't know what I'm doing. My producer is fantastic, though. So anyway, By the way, on your way out, please hit that like button, subscribe. Helps the channel out a lot. And until tomorrow, you guys just, I don't know, think of some sort of catchphrase.